Hi dear friends, today is Friday, January 16. Let's look at the charts of the euro and the pound sterling and discuss my trading ideas. Both the euro and the sterling drop against the US dollar in response to the US economic data. The number of initial unemployment claims went down by last week, much lower than expected. Besides, manufacturing PMIs by the Philadelphia and New York Federal Reserve Banks rose, defying their forecast of a decline. Such strong figures encourage traders to go long on the US dollar against risky assets. Several Fed policymakers said yesterday that the cycle of rate cuts should be suspended. Indeed, the recent metrics on the labor market and higher than expected inflation at the year end require a pause and further monitoring. This message was delivered by Thomas Barkin, Raphael Bostic, and John Williams. They are on the same page. With such a viewpoint of influential officials, it makes no sense to predict a rate cut at the Fed's policy meeting on January 27. I reckon the first rate cut might happen in mid-spring this year. In this context, the US dollar gained strength and nudged lows against the euro and the British pound. Currently, dollar bills are setting the tone. Now let's look up at the economic calendar for today. The CPI for Germany is likely to remain flat from a month ago. In annual terms, the CPI is expected to decline to 1.8%, lower than the ECB target rate. The CPI for Italy is projected to be minus 0.2% on month and 1.2% on year. Traders will get to know the economic data for the US. Analysts foresee an uptick for 0.1% in U.S. industrial production in December from 0.2% in November. Other important reports are manufacturing production and capacity utilization. Fed policymakers Michelle Bowman and Philip Jefferson will make their comments. The market will give priority to remarks from Fed policymakers as their speeches determine the dynamic in the currency market, in particular the US dollar. Now we're discussing the charts. On the 1-hour chart for the euro, 1.1595 could be a point to open buy positions on the condition that a one-week low is broken, followed by a false breakout. The target is 1.1624. If this level is broken and the price settles higher, the door will be open to 1.1649, 1676, where I will plan short positions during a bounce. The targets for selling will be 1624 and 1595. If the bulls are not active there, the instrument could plunge as low as 1.1558. Then I will consider long positions during a dip, bearing in mind climb of 25-30 pips. As for the pound sterling, the bears will enter the market after 33.92 is tested after false breakout. The target will be 1.3363. If broken, a larger sell-off will follow with targets 33.41 and 1.3312, where I will plan long positions expecting a bounce of 20-25 pips. Long positions are risky during a decline. Don't forget that the overall trend is bearish. So long positions will be relevant only after false breakout of 1.3363 and a failed confirmation of 33.41. If the bears are not active at 1.3392, an upward correction will take place. The instrument might climb to 34.17 and 1.3441. Then I will consider sell positions, bearing in mind a drop of 20-25 pips. Good luck and have a nice weekend.